Hi everyone, welcome back to another video. So today on the agenda is we'll be talking about the stock Royal Dutch Shell, ticker symbol RDSB. But before we start, guys, if you're new to the channel, definitely consider subscribing. I'm on a goal to get to 2k subs, so you know all the help I can get. Also, if you like the video at the end, definitely consider giving it a like and a comment. It helps boost the YouTube algorithm for my channel and gets my channel out to more people. So yeah, that's it for the intro, guys. So we're going to get into the video now. So we're talking about Shell. We're going into a few basic information about the company, going over the financials, also talking dividend and the growth of the company, valuation of the company, and also any general news. So we'll just take a look at some key information about Shell. The name Royal Dutch Shell, the ticker symbol RDSB, founded back in 1907 in the energy sector. They currently have a market cap of 85.948 billion, a listing market cap of 77 billion, and outstanding shares of 7.7 billion. And there's a website there, www.shell.com, if you want to check out information about yourself. So they operate in energy as an energy and petrochemical company worldwide. Operate through integrated gas upstream and downstream segments. They also explore for extracts and crude oil and natural gas liquids markets, and transport oil and gas as producing gas to liquid fuels and other products that operates upstream and midstream infrastructure necessary to deliver gas to the market. I'm not going to bore you reading the rest of that, guys, but just a basic little bit of information about what Shell do. So again, some more information here. They provide around 10% of UK oil and gas. Over 600 aircrafts are fueled daily by this company, which is across 8 different UK airports. Also 5 million customers are served each week, plus with 1,000 plus service stations in the UK. And also each year they spend 200 million on research and development in the United Kingdom alone, as well as employing over 6,000 people in the UK. A little bit what I mentioned there, just a sort of graph of looking at what they do as a company: sales and marketing, such as retail, aviation, power, exploration, development, extraction, transport and trading, as well as manufacturing and energy production. You see there, guys, on that graph, they've got the fingers in sort of many pies at the moment. One thing I'm noticing they're missing a bit is the natural, the route where BP are going down. I'm trying to look for more renewable energy. They're mainly still focusing on the oil and gas, which is fine for now. Obviously, oil and gas isn't going anywhere anytime soon, but that's why in my BP video I'll sort of give them the heads up at the moment currently. But Shell still have a lot of business, so they have quite a big contribution to the UK economy as well. Over 2 billion in gross value added to the UK economy in 2018, generated by economic activity and the activity of the supply chain. So over 28,000 roles supported by activity across the supply chain, and 1.5 billion direct spending based in with UK suppliers, so it's good to keeping things at home in the UK. So let's have a look at the financial position analysis now, so the balance sheet time. So you can see short term and long term, the assets do outweigh the liabilities. Assets is generating income, anything that generates income for the company, and liabilities is something that takes money out. So a little bit more of a dive into it now. Physical assets, which basically is anything which could be with petrol station, anything at the petrol station or anything like that. Short-term investments, receivables, that's money that they're waiting in from clients, for example, as well as long-term and other assets and inventory. So quite a big supply of assets there. So the liabilities and equity. So the equity is the assets take away the debt. So the debt is 75 billion. And other liability of 107 billion, as well as accounts payable. That's money owed out still. So in total, the equity is 160.3 billion. So the debt to equity history analysis. This is of September 2020. As you can see on the graph, the debt is 80 billion currently, with the equity 160. So it's a 50% debt to equity ratio. The equity does like it's going down a little bit at the moment, as the debt looks like it's rising a little bit, which could be quite concerning, but there's still a bit of a gap between the two, so I wouldn't worry too much yet about obviously any cash within the company. The annual revenue is forecast to grow 16%, which is higher than the industry average and also the market, which is only averaging 6.2%. So in the future as well, the industry does prop itself back up a bit, just over the annual forecast growth of what Shell are expected. So in 3 years, they are forecast to become profitable, which is considered a faster growth than the savings rate of 1.2%. And it's also faster than in the next 3 years, obviously they're considered to grow faster than the market average. The good thing is, obviously, that the main thing, they are expected to be profitable. Obviously, that's what business is about, profit. And the revenue is supposed to be 16.1% per year growth, which is faster than the UK market. Obviously, the downside is 16% revenue, which is forecasted to be slower than the 20% average per year. So now we'll have just a little look at the share price information. So on this graph, basically, you can see over the last 3 years, Shell stock has fallen dramatically. They're now currently only sitting at around £11.15, and you can see at the height of the stock price information, it was at £28, almost £30 stock, so a massive drop. So we can see the big dip, it was in March, and then since then they've just sort of gone from bad to worse. They've had a little boost up this week. There was around £9 at the start of this week, but have clawed the way back up to £11. They are 47% undervalued according to Simply Wall Street. The fair value would be around £21, so it does give you hope with the fact that they're undervalued and forecast to be profitable. Obviously, with all that's happened this year, oil and gas prices crashed back in, I think it was April time, May, I'm not sure if anyone wants to correct me if they know the actual answer to that. As well as lack of supply and demand with people being at home from lockdowns, etc. So BP and Shell have both suffered massively. So they are massively undervalued, almost 50% at the moment. So we'll just take a look at the dividend. It's been reinstated to just over 4% now. We'll take a look at the reliability and sustainability. So the higher than the bottom 25% of dividend payers in the UK market, which only average at 1.86%. But low compared to the top 25% of payers in the UK market, which average at over 5.29%. Dividend payments have been volatile in the last 10 years, which sort of brings into line with the next point, which the dividend payments have fallen. So they've had falling dividends and not growing dividends each year. But in 3 years, they are forecast to be well covered by their earnings of a good solid 40.6% payout ratio. So the current payout to the shareholders, they are paying a dividend while the company isn't actually profitable at this current moment. So currently they're paying minus 45%, so basically making a loss. But as I said, in 3 years, they're forecast to be paid well covered by their earnings. So earnings retained and then earnings paid as a dividend. So 41% of the earnings will be going to the shareholders. So the stability and growth of the payments. The growth has been really up and down, so the yield's gone up and down, and the dividend per share has absolutely dropped massively this year. So it's around the same as the yield, 4% dividend yield at the moment, with a dividends per share of 0.640. So just a bit of Shell news, guys. There isn't too much news basically going on at the moment. The only real news is that they've reinstated that dividend payment. Well, not reinstated, they've actually upped it back a little more, because they did cut it a few months back, but now, which obviously has come to a surprise to some people, but I think it's mainly due to investors maybe selling off stock, maybe getting a bit scared about low the price is getting, which you shouldn't do, by the way. That's just a bit of a silly thing to do in my opinion, but I think that's what's happened. So they've got extra cash from the sales, and it's now gone back into pumping that dividend up. So guys, that is pretty much it for the video today. Let me know what you think of the video and what you think of Shell, if you're thinking of buying them, if you own them currently. I think they're a stay away stock. Me personally, I'm not buying Shell back at the moment. I think the oil and gas, I don't want to be too overexposed in that industry, but I do think they still have a future. It's just my personal opinion. So guys, I'm going to leave you to it today. Take care. Bye.